Hello, and welcome to our market alert video for today, which is January 12, 2024. And I want to dive right into the important information that we want to share with you about inflation. We just got the numbers and what that means for 2024. A lot of important stuff to get into. But before we do, I want to thank you. I just got the news that our podcast had 250,000 downloads in 2023. 250,000. Oh my gosh, that's a mind blower. So for those of you who are podcasting the show, thank you so much. However, our goal is to get to 1 million. So if you're not podcasting the show, you need to help us to get there. We want to celebrate with you 1 million downloads in 2024. It's easy. Just click on the link associated with this video and you'll find it. You can podcast it, listen to the show every week at your convenience on your device. So anyway, let's talk about what happened this week. We got the inflation numbers, and the inflation was up. And so that was a surprise. Oh no, inflation's going up. We thought it was going down. This cannot be true. But we're going to go over with you why we think that it is not something to be overly worried about. And so I want to explain why. So as Ricky Ricardo once said, Lucy, you got some splaining to do. So let me explain. So let me share my screen with you. Now, you'll probably recognize this chart if you've been watching our videos over the last several months. And so I want to go over this, but for those of you who haven't seen this chart before, I want to explain it to you. So the first thing I want to do is I want to go over here to the top left. This is the date. And all down here, you can see the dates. This is the CPI level. That's the inflation by month. So that's what this numbers are. The monthly change is what was the change from one month to the next. If you multiply that by 12, you annualize that monthly change. And then this is the difference from 1 year to a year ago. Now, the way that they calculate inflation is important to understand for us to understand why we think that the increase in inflation this month in December was not that big of a deal. So let's go back to 2022. So in December of 2022, they looked at the change from November to December. That change was a minus 0.31%. Inflation went down by 0.31%. That was good. Now, what they always do is they compare a year ago to today. So the number today that we got this week, we got for December, which was a change from November to December of minus 0.2%. Minus 0.2 was, believe it or not as big of a decrease as 0.31 was. Therefore, because inflation didn't go down as much as a year ago, it went up. I know that's reverse English. I'm confusing the heck out of you, but that's what happened. That's why inflation went up here to 3.4%. So this red bar right here, that's December of 23, and you can see that inflation went up just a little bit right there. Now, let's go back here and let's have some fun. Let's forecast, okay? So let's look at, and let's assume for a moment that inflation goes up by 0.25% every single month this year, okay? So 0.25, which is higher than the average going back to September of last year, okay? So inflation starts to pick up again. 0.25, the numbers you see here in pink, they're in pink because they are higher than the number from a year before. Okay, so in January, let's say when they announce the January inflation numbers, that is 0.25%. Okay, that's fine. That's lower than the 0.8% in January of 2023, a year before. And therefore, inflation will drop to 2.8%. Let's say the next month, February, 0.25%. That's less than the 0.56 in February of 23. Therefore, inflation goes down to 2.5. So all these months right here are all pink because the inflation rate a year before was really high, as you can see. So therefore, we think inflation is going to go down and get down into the 2% range, as you can see here on the bar chart, here in May, June, July, August, in that time frame. Now, the Fed has said they're not going to lower interest rates until they're confident that the inflation rate is down to 2 and it's going to stay there. Well, when do we think it's going to happen? In April, right here. Now, if that's the case, the Fed's not going to lower rates in April. How long do they need before they feel confident? Well, we think that's 3 to 6 months. So if it's in April, that puts us into July, August, September, in that range when they've had 3 to 6 months of an inflation read that's down in the 2% range. When they see that, we think they'll start lowering interest rates. So what does that mean to us? As you guys know, we've been talking a lot on our videos about the fact that when interest rates go up, bond prices tend to go down, right? And in fact, that's what happened, and why we had been out of bonds for a year and 8 months leading into December of last year, because the Fed was raising interest rates and bonds fell into the worst bear market they've had in history. So now we think that because the Fed is lowering interest, or may lower interest rates this year, that we could see the biggest rebound in bonds in history. So we could see a big rise in bonds. We're excited about that, which is why we bought back in December of last year. Won't be a straight line, obviously, but we think it's going to be a very strong year for bonds. Now, what does it mean for stocks? Well, stocks tend to perform well when companies have profits, right? So that's what they look for. If the Fed is going to lower interest rates in the second half of next year, and if we see the economy not going into a big bad recession, then that'll bode very well for stocks as well. Why? Because if interest rates are down and inflation's down, the consumer has more purchasing power. They'll buy cars and houses. Businesses will borrow money and grow their businesses. And that's good for profits, and profits are good for stocks. So we think stocks will do well also this year. Now, some of you may be wondering, well, and we've said we think bonds will outperform stocks. Some of you may be saying, well, then why don't we just go all in bonds, right? Well, the reason is because we don't have a crystal ball. We don't know for sure. We could be wrong. Ooh, wow. Is that what it feels like to be wrong? Oh my gosh, that's terrible. Don't want that. Anyway, Donald Rumsfeld in the Iraq War is famous for saying that there are 3 things that he looks at, right? One is the known unknown, the other is the known unknown, and then there's the unknown unknown. The first 2, he said, we can deal with. The third one, yeah, you don't know, and you have to deal with when it comes. In the investing world, how you deal with that is diversification. So even though we think bonds could do better than stocks, and we're confident in that, we don't know for sure. Therefore, we want to be diversified, which is why we're still going to own stocks this year. And by the way, we still think they're going to do well also, so it's not a bad thing. So overall, this year is shaping up to be good. Now, again, as we said, we could be wrong, and the Fed may have overdone it with interest rates, and we could see the market go down. We could see a bad recession and a market crash. And for that, we believe we need to have a strategy to address that. And we do. We have our invest and protect strategy that is designed to help our clients to not lose massive quantities in big bad bear markets. That's why we sold in November of 2007, before the big market crash of 2008. Our strategy told us to do that. In March of 2020, the day before the pandemic was announced, our strategy said to sell. And then last year, of course, our strategy told us to sell in April. And you know what happened in 2022. So we want to help you to avoid major losses. And that's what our strategy is designed to do. And if that happens this year, we would want you to be a client of ours. Now, one of our big goals is to create what we call SCWPers. And if you don't know what a SCWPer is a client of ours who has retired and is now enjoying their second childhood without parental supervision. So SCWPers is the acronym for second childhood without parental supervision. We want you to join SCWPer Nation. We want you to become someone who has retired and is out there playing and not worrying about all this boring financial stuff. We want to do it for you. So go to our website, meet with one of our retirement planners, attend our seminars, subscribe to our market alert video, all kinds of opportunities there for you to enjoy and have fun and learn. And also, I'm asking you, please, to download our podcast. We want to have 1 million podcasts this year. That'll be so fun, and we'll celebrate right along with you when that happens. So thank you for watching this video. Share it with as many of your friends and family as you possibly can. We want to help as many people as we can. All right, so thank you, and we'll talk soon.